Good morning, everyone. Welcome to this week's episode of the Grain Gauntlet. As always, 5 questions from clients and potential prospects. A lot of big events this week. Some of these questions came in before yesterday's big news. And of course, today we've got a report. So lots to talk about. Are you ready to go?
Yep.
All right, ready to go. Sounds good. All right, question number 1. The corn market hardly moved after the planning intentions report, and then he withstood the tariff news. What's going on?
Fantastic news, huh? Well, our fundamentals are tight. We're at 1.54 billion bushel NA stock for this year. And guess what? Today's USDA report will lower that. Okay, I'm not saying might, they will lower that number because demand has been that good. I'm looking at 1.4, 1.25. They may come months to get there, but we're going to go down probably below 1.4 billion. There's nobody else exporting corn in the world. Mato Grosso's price is way higher than ours. They don't have anything to export. We are it. The demand is going to stay strong for this old crop. Now, we're going to plant a bunch of corn, but that's next year's crop. Okay, that's new crop. That's why we're net long on old crop and net short protective on new crop. And we are from up at 470.
Yeah, absolutely. And maybe good news even for new crop and what's taking place. If these countries we're making these deals with start buying from us, we might have some new buyers of corn even as China and pieces get moved around. Believing those tariffs yesterday helped out a lot, and that could show up down the line with new crop corn as well.
Yeah, and the fact the president or prime minister, whatever he is, of Taiwan said that they plan on fixing the imbalance with the United States by buying agricultural and energy from the U.S. So more good news ahead. Obviously, China's not going to buy much from us at 125% tariffs. And they oppose about a 74%. We don't need China if the rest of the world comes as they are.
Exactly. All right, next question. If we get off to a quick start with planting of corn, will it be able to keep going up anyway, these prices?
Old crop will lead the way because of demand. If we get a quick start, that may delay or set back the rally for 30 days because it usually does. It means less risk. We got the crop planted and the market will expect more corn acres. So yeah, I'm not going to be aggressively long right now in either old crop or new crop or hedge and new crop. However, I do believe that with demand as strong as it is, and I expect it to get stronger, that we will see a rally into our traditional July 4th holiday.
That's right. All right, next question. This one we got a little bit earlier in the week, so it's a lot has happened since then. But the question was, Trump just upped the tariffs on China to over 100%, and beans went up for the second straight day. Is the possibility China buys no beans from us already priced in?
They can't buy no beans from us because Brazil doesn't have enough beans to feed the appetite of China. So something's going to have to get done at some point, is my take. Can they go, a good chunk of time without buying beans from us? Yes. But that would take all the Brazilian beans besides what they use domestically. And the rest of the world would have to come to us.
Right, because what would happen to the prices there, right? Yes. And then since this question, China retaliated, Trump upped his again. But then final straw yesterday, Trump drops the tariffs on all countries, lowers them, suspends them. And that's what will, if China, let's say China buys all of Brazil's beans, these countries now will have deals with us. They can come to us, and they would want to anyway because the prices in Brazil would be just ridiculous.
You're right. And that's exactly right. And I do believe the one thing that countries would be happy to buy to offset the trade deficit with the U.S. is food. And that plays right up Trump's alley with helping farmers. So
right, was that
win-win.
And no one can rule out a deal made with China at some point too, in plenty of time, because they be buying from us at the end of the year. So
Yeah, and believe me, China isn't going to survive without trade with the U.S. right now.
deals get made done. Yep. All right, next question. You talked a little this week about crude prices. That's was you talked about last week. You talked a little this week about crude prices under Trump. How much potential help do you think there is for farmers?
A lot. I think $50 barrel crude, we're headed that way. And for those of you that went short crude last week, good for you. It's already a profitable trade. I think crude will continue to slide. The fear of recession being greatly reduced with the change in tariffs, even by some of the experts saying that they're not looking at recession now, will help crude prices and help stabilize, and maybe we go down to 50 a little slower. But I do think whenever crude prices go down, everybody benefits, including the American farmer. Think about it. Crude's in everything. Everything. Plastics, transportation, everything.
Absolutely. And yes, you heard that right. We do trade crude for those who missed it. And if you want to put a hedge against input costs, we're here to help.
Yeah, by the way, the crude thing is the only thing I have traded in the last 20 years outside of what you guys grow or what you produce, because it does affect all costs, fertilizer, everything, transportation, diesel, everything, what you buy at the grocery store, because there's cost of that from crude. So the best hedge overall on input cost is crude.
Absolutely. Okay. Last question. This one's from a prospect. The question was, with all the added corn acres, I'm planning on going the opposite direction and upping my soybeans. What are your thoughts on that?
Anytime you can do the exact opposite and clanking of what the vast majority is doing, especially when there's a big switch, there's a higher probability for you to be successful with that small crop. You have to be willing to store soybeans into next year. I think the best prices come next spring, 26, because we'll need to buy soybean acres. Of course, soybeans are influenced a lot by exports. We export almost half the crop. So with China cutting out, there's some risk there. If we lose exports to any great degree, the less acres isn't going to have an effect, and your gamble of switching to beans will fail.
Okay. All right. Great advice. That's it for this week. Thank you, everybody. As always, you can email adminstaff@hedge-plus.com to submit your questions, and maybe we'll get to yours next week. Thank you.
Have a great week.